David Elston is a software developer and a divestment leader for 350 Silicon Valley. Like many, he was called to climate action by the Dakota Access Pipeline protest. He started campaigning against fossil fuel banking and giving Move Your Money workshops, often with Sandy, around the Bay. In fact, there's one going on tonight, correct, at Santa Clara University, in case any of you are heading back to the peninsula. But throughout all this, David has a dark secret. He was part owner of every public oil company in the world. Every drop of oil padded his 401k. As he struggled to divest, David vowed to make it easier for others. David will introduce sustainable investing and show you how you can take control of the impact of your investments. He'll demo the tool he's been developing, which uses impact data from nonprofits and others to help you build a clean portfolio.
Hi, my name is David Elliston. You can find me at cleanmoney.us, which is my project and where I put resources out for where you can find banks and such. I'll be talking about finance, so I should mention, and we need some kind of disclaimer, that I'm not a financial advisor, I'm not a financial professional, and that I can't give paid advice to people, basically. My idea with cleanmoney.us is to give peer-to-peer advice, to help each other and support each other through the transition out of this. But with regard to investing, past performance is not indicative of future results. All investing involves risk, and this data is believed to be accurate. So how did we get here? I haven't been to many protests myself until the last couple years. I'm an engineer. I'm used to sitting behind a desk, but we got to this moment, right? After the Dakota Access Pipeline protests, and I realized that my Bank of America checking account was sitting there helping Bank of America fund all these things. I felt a new emotion, something we started to learn about in 2017. I felt complicit. It was kind of an emotional shock for me, and I think that Thanksgiving in 2016 was a low point, the lowest point, a total emotional wreck for me as an American citizen, to watch and learn about the protests and the violent actions that were taking place in the Dakota Access, on the Dakota Access Pipeline event under Barack Obama as president, right? So things did not look good, and I think we were all looking for some lever. What power do I have, since that system's not working for me? And after cleaning up my Bank of America account, I realized what power money has. And it felt very satisfying to move over to a credit union, to go into the office and give Bank of America a piece of my mind. It was kind of short-lived, though, because when I went out and started presenting with Sandy and others, I learned what you guys know now, that there is carbon in our retirement accounts. There is toxic assets in our nest egg. And in fact, I personally realized that, yes, I owned hundreds of oil companies. Pretty much every public toxic company you can imagine, I owned. And perhaps many of you do. Does anybody here have a mutual fund, or in their 401k, or maybe an IRA, something like that? So, and some of you may have pensions, which we didn't talk about much, where you don't have much control over this, of what they invest in. But many of us have these retirement accounts, and so I faced mine. And it was bad news. I went to the Fossil Free Funds site from As You Sow, which we'll be hearing about, seeing about, and I looked up my typical mutual fund. This is the Vanguard Total Stock Market Index Fund. So, by the way, this is in so many 401ks out there you can't imagine. In fact, the default that people are directed to is to have their money in this fund and a couple others. It's considered an appropriate thing to put it in, right? And what it has, Fossil Free Funds has this fantastic tool for breaking down what is in the mutual fund. And so obviously this mutual fund total stock market index contains kind of every US public company you could reasonably invest in. So there's thousands of them. And this includes producers of carbon, like the Carbon Underground, the largest holders of carbon who actually are priced on their carbon. includes very little coal industry. They're kind of dead, but oil industry is big there, and then all the consumers. So you can kind of add it up, and there are different ways of measuring this and different numbers you can jump onto. But here, I think a useful number is at 10%. This is 10% of the companies in the stock market have, oil and gas as their main businesses, or significant polluters because of their consumption of it. And with the S&P 500, which I hope everyone has heard of, it's a little worse, 11%. But I mean, it's kind of consistent. In fact, most mutual funds are going to have a lot of fossil fuels in them. And so I wanted to get rid of that. I wanted to get rid of fossil fuels from my portfolio. And what I took for a target was to reduce my carbon footprint. And when I show you live this site of fossil-free funds later and we click through it, you'll see that you can look at the average carbon weight of all the companies in your portfolio. And you can start to look for sets of companies that have been optimized for not having so much carbon. In fact, there are simple things you can do right now. You can buy the S&P 500 without the main fossil fuel producers. This is a ticker. It's a fairly easy thing to sell your S&P 500 fund and buy an S&P 500 without mutual fund, without fossil fuels fund, SPYX, if you're looking. So this is like a simple step you can take. Now, it still has 6% fossil fuel. It's not like super clean because of the consumer side, but the products are out there. There are simple things that we can do to move our money. And there are funds out there that are actually really clean, right? If you go to fossil-free funds, you can research and find the funds that have no carbon in them. No, sorry, not no carbon, but no oil companies, no fossil-free, no fossil producers, no fossil consumers. And so I spent a lot of time on fossil-free funds last year looking at the profile of different funds. But I was also a pretty serious do-it-yourself investor. I had a lot of asset classes and a very complicated portfolio. And it's not actually that easy. If you look inside a fund like Parnassus Endeavor, it's great that it has 88% less carbon footprint than your typical fund. But it also is not exactly like your typical fund. It is well known, it's very famous, it's been doing great. It also has like 20% of its holdings in Qualcomm and Gilead, very not big companies, right? So this is not a total stock market index anymore. You're making very serious bets on something. It's not the kind of diversified fund. So to sort of, if you start looking for diversified funds, and you can do this, you can go to fossil-free funds. You can find my presentation later and find out all the things to punch in. But you look for a large stock fund that's fully diversified, and you'll find like 9, right, out of 10,000 funds. There are 9 large cap funds that are diversified, and some of them we talked about, like Parnassus. This is labeled as diversified, and a handful of funds. So it's not quite ready for us just to jump over onto these things. It is a little more complicated than it looks. So I did spend last year learning a bit about sustainable investing, explain what I learned and how I learned to bring portfolios together, and then the tools that maybe you can start to take a look at to see what's inside of yours and start to get comfortable with the new options out there. So how much time do I have? Minutes. Wow, I must be talking quickly. Terminology. So socially responsible investing is what this was called in the 80s. This is when grandma went in there. She didn't want tobacco or whatever. It has evolved over time, but fortunately the acronym has stayed the same. It is still SRI. It is now called sustainable, responsible, and impact investing. And here is the industry definition. This type of investing is a discipline that considers environmental, social, and governance criteria in addition to financial criteria when deciding what to invest in. And so, as Sandy pointed out, looking at the US, $8 trillion, looking globally, this was 2 years ago, $23 trillion. This stuff has been happening, but it hasn't been happening for us. I mean, us, unless you are a wealthy person, it hasn't been really accessible to you until more recent years. But the wealthy people have been doing this and doing fine. Now it's coming to us, and we need to figure out a way to make that come very quickly. So just to give you the quick sense of what is impact investing, there are different types, and this is not my slide, this is from Morgan Stanley, so they're very respectable. The first type was called restriction screening. Like, I don't want fossil fuels in my portfolio. I want the S&P 500 without fossil fuels. So that was that kind of ticker where you have that kind of fund is a restrictive fund, and you can get rid of tobacco, and you can start to filter out many things. And this is like this is version 1 of socially responsible that happened, back in the earlier days. I don't want to own that. That much I know. I don't know what I want to own, but I don't want that. And what that evolved into in the last, say, 15 years is this ESG, environmental social governance. People start to use words like sustainability. But what it means is that companies, when you're deciding as a mutual fund manager, I say I'm going to manage a fund and it's going to look like an index fund, but it's going to be better somehow. It's going to be more tolerable. You're going to like the components in there. And the way they do that is they measure every single company in there on criteria of how good or bad they are, and they try to find the mutual funds or they try to compose their mutual fund from the best actors out there. The other two dimensions we'll see less of. Thematic exposure means I want to own solar. I want to own this particular thing. And yeah, we can all do that. It's very common to own 5 or 10% energy, but if you put 50% of your money into solar, you're in for a really rocky ride. So thematic exposure is something we bring in for diversification and also because we have conviction. I want to invest in clean energy. I'm not going to lose my shirt, but I don't quite know what it's going to do. I'll put in my small amount of that. And then impact investing is not going to be available to you in the public markets. If you look at that end of the scale, they start to talk about things that don't provide competitive returns. And it is basically very difficult, if not impossible, to find something for sale in mutual funds that aren't intended to provide competitive returns. But as we evolve together, I would like to help others find ways to invest in those things that maybe have a charitable component, and that may be more in the private area. I want that technology to succeed enough that I'm going to be, charitably involved in that. Or I want community-based bonds, and I'm willing to put 5% of my bonds into community development bonds at lower interest rates to my community members. But here we're pretty much talking about taking your portfolio, managing the risk, and trying to get the same return you've been hoping for in the past without having to own toxic things. And just in terms of what ESG means, this is kind of a bunch of criteria, but from an environmental side, you might measure the cleanliness of things, technology, pollution, water use. From a social perspective, labor relations, and from a governance side, board diversity. We'll actually look at another way of looking at this. This is 17 of them. Okay, and then how does it perform? Well, there are nice long-term track records here. So looking at the all-country world index, every stock that people can kind of buy, they have a ex-fossil fuel version of that, like the S&P 500 one that I showed you, and it's been doing just fine. Yeah, of course, it's doing a little better because fossil fuel is kind of on its grim, decline, but it generally performs like the overall market. Now, if you look at the social index KLD, which has been around for like 25 years, this isn't about fossil fuel anymore. This is about some kind of social metrics, and they're looking at these companies and judging them, and it also has basically kind of performed like the market, maybe a little better. But generally, these funds are trying to behave like you would expect, but give you exposure to the people who you want to be with. So I'm going to jump into a demo now, because what I found, you have this fossil-free fund site, and you can go there, you go into your account, you see like your biggest holding, and then type in that ticker into fossil-free funds, and you get the bad news. Okay, but how do we clean it up? I spent hundreds of hours last year doing this for myself because I'm a little fussy about asset allocations, but this is what normally people own. This is what you will typically find yourself ushered into in any 401k is a target date fund or a fund that has multiple pieces to it, and it may even evolve over time with you. If you say, I want to retire in 2040, it'll slowly move the bond number up. The point is that your return is essentially 90% dictated by the asset classes you choose. We're supposed to have these 4 types of asset classes. So if you're going to compose your alternative, cleaner portfolio, you just need to be finding these pieces of it. And that's why I built this tool. So I'm going to jump into a demo now, because what I found, you have this fossil-free fund site, and you can go there, you go into your account, you see like your biggest holding, and then type in that ticker into fossil-free funds, and you get the bad news. Okay, but how do we clean it up? I spent hundreds of hours last year doing this for myself because I'm a little fussy about asset allocations, but this is what normally people own. This is what you will typically find yourself ushered into in any 401k is a target date fund or a fund that has multiple pieces to it, and it may even evolve over time with you. If you say, I want to retire in 2040, it'll slowly move the bond number up. The point is that your return is essentially 90% dictated by the asset classes you choose. We're supposed to have these 4 types of asset classes. So if you're going to compose your alternative, cleaner portfolio, you just need to be finding these pieces of it. And that's why I built this tool. So this tool has been my dream to build since I was manually working with fossil-free funds for many, many hours. The idea is to bring that impact data into the portfolio planning process. And one dimension to this is simply to rate 401ks that are out there. So for instance, we come in here and we've put in some of the funds for various 401ks like Google. We might want to know, well, what's in the Google 401k? The Google company has presented these funds to its employees, said, these are the funds available to you. Let's see how we're doing. And what we'll get into a eye chart level table, but first in the process of building a portfolio in your 401k, you would choose your investment time horizon in order to give yourself an asset allocation. And so this is something you might want to figure out on your own. There are tools out there, but 20% bonds would be an appropriate allocation for somebody my age and for quite a range of people. Next, we want to try to help you customize what your impact priorities are. So we have data, measurements of companies in various dimensions, and then the question is what is valuable or most important to you? When we measure something like Earth, we're looking at the efficiency of a company in terms of its water usage or power usage, its adoption of renewable energy and such. And so the ratings that we present here are based on that kind of thing. If we present wealth, it has more to do with equal access to pay, employees not being brutally overpaid, just looking at the economic side of things. And on the equality side, looking more about board diversity. There are great data on the performance of non-diverse boards. They are not doing particularly well. The 17% of boards out there with no women on them are underperforming. And so you might simply, and in fact, this data is not mine. This data is coming from a company called Hip Investor that's been doing ratings for the last decade and is here in San Francisco. So they're supplying this data, and I'm explaining a bit about how they look at ratings. But their philosophy is not entirely about the impact, but also the benefit of, the financial benefit of sustainable companies, that a company that is operationally efficient tends to have better returns. A company with a diverse board tends to have better returns. So that's where they're coming from. But this is simply a ratings mechanism, and then we allow you to kind of overweight things that you may want, and obviously Earth we'll choose today. And then now we look at the funds. And so we're working on ways to make this a little more easy to understand, but these below are the funds, are the funds in Google's 401k. This is typical. Let me close this one because it's probably the least helpful. But for instance, Dodge & Cox stock is a popular fund in 401ks and it's a nice value fund. What we can expose here from the As You Sow is the fossil content of this fund. So we take the number from As You Sow, which you can get from their site, we embed it in here so that you can start to compare funds against each other and find them in that context. And then we also want to bring in other data from their site. For instance, I don't know, I guess I'm not supposed to make fun of Google. I guess Google thinks maybe 5% is approximately the amount of fossil fuel you should have. When we bring in guns, we'll find out what an appropriate amount of guns, gun companies that I should own according to the fiduciaries over at Google. But anyway, my point here is actually Google tries to be a leader here. And this is their 401k. And this is the reality. This is why we need to take action together and move our money into these sustainable products to make them viable to put into 401ks so that we can get into full change of the holdings of people. So if you don't have a 401k or you want to build your own, then let me just try to get back to the beginning. So you can also build your own ultimate portfolio. In a 401k, you're obviously very restricted to their fund choices. But if you're just rolling over your IRA at Fidelity or wherever, you have thousands of choices, which is not necessarily helpful. And so that's something that we're also going to help. Good news is there's like 200 sustainable funds out there. You don't have to choose from 2,000, and most of them are reasonable choices. But what you can do is you can come through and look and build this up a piece by piece. You can look at funds and the fossil content of various funds. You can look at ratings that reflect you. And we're looking for ways to bring together the process of choosing funds and then looking at the ratings. And another thing that you can do is bring in predefined portfolios. So I know it's hard to find selections of funds, and guess what? People write about this stuff on newsletters and whatever. Here's a portfolio, so we'll just bring in these portfolios. Here's Morningstar's example. Okay, bring it in, and so that you can see, well, how much guns do I get with that portfolio, right? And my hope is that advisors will come, put on free portfolios here for us to use, offer their services in addition for premium people who need advice, but there will be nice canned portfolios that have been defined at your asset class. You know, here's a health impact portfolio. There are specific funds that this advisor has curated that have kind of strong health ratings. And, you know, frankly, when you build a modern portfolio, these robo-advisors are putting 25, 30 funds into it. So eventually we'll help you build something that's really sophisticated. But the idea here is to help you build something simple. And we would appreciate, you know, anyone wants to give this tool a try. We're trying to make it helpful for folks. And just to, sorry, I have to show that these are connected to As You Sow. So when you click through on the fossil percent here, you can get into the As You Sow screens and all their details as well. And so that's the integration we're trying to provide. Thanks.